Minutes before we get to a very tumultuous opening bell,
right.
I think it's fair to say.
Even though I would like to have a Shake Shack burger right now.
I think we'll have one during lunch. They're going to do the honors ringing the bell in about 7.5 minutes. But let's get to something away from DeepSeek and the implosion going on among some of the hyperscaler spending plans potentially. Talk SoFi.
Right. Now, SoFi is Anthony Noto. He's made a major turn. The stock used to be much lower. The shorts were all over it. He just delivered consistent. He's flipped the model to be a little more financial service and a little less banking. He does report this morning. Now, people are going to say, wait a second, it must have been a miss. No, the actual quarter was good. It must be the forecast. Only one line, the EBITDA was light. People were looking for 905 million. And they came at 845. My problem here, David, is why would I sell it over a forecast and not the fact that it's doing quite well? And the answer is DeepSeek. In other words,
it's just getting caught up in that.
Up because people.
It's not because it's had such a great year and a great move. Obviously,
it's the kind of the secondary of like, well, wait a second, have we overstayed our welcome in a red hot stock? And I think, David, the red hot stocks today are trading as a unit. And SoFi is being caught up in that. Now, do I want to buy SoFi? It just had such a big move. That's the problem. We've had stocks that have such big moves. Why do we just come in today and say, you know what? I'm going to buy it down 10 without any particular answer. And so what people are going to say is, I want to see what happens during the day. I feel that way myself about a lot of these, like a GE Vernova, which I've really liked for a long time. But do I want to step in right here with the GE Vernova and say, this is it? I don't feel capable to be able to say this is it. SoFi, GE Vernova, none of these.
You can see what we're looking for in terms of an open that's a little less than 6 minutes away.
Recent revelations by Jim Cramer have taken investors by storm. As Cramer uncovers potential ripples created by President Trump's tariff maneuvers, there's one company gliding under the radar, ready to capture attention: SoFi Technologies. With its diverse suite of services spanning lending, banking, and investment, SoFi stands tall amongst a sea of uncertainties. Yet, what truly sets it apart amidst the financial storm? Let's dive deeper into the enigmatic world of SoFi. Welcome back, everyone, to Investocracy.
It does take us to our talk of the tape, the road ahead for stocks and your money. Let's bring in our experts. Liz Young-Thomas, SoFi's head of investment strategy. Cameron Dawson, chief investment strategist at New Edge Wealth, both here at Post 9. Christina Partsenevelos watching the sell-off in chips. That's dramatic. Seema Modi is all over the momentum names, which we already told you are under more pressure again. Steve Leisman looking at what all of this says about the current state of the U.S. economy. Liz, I'll just go to you first. Your feelings and thoughts as you watch this market being pushed and pulled all over the place.
I mean, it's chaos right now, right? We're in a chaotic environment. The market is obviously not calming down, even with the recent announcement literally just minutes ago that tariffs had been paused again until April 2nd. No relief, actually got worse in the sell-off. So I think the uncertainty and the fact that this now feels like we're just pushing off the decision until further into the future has everybody on edge. Not to mention, it's not just the market. It started to bake into some of the data. So we've seen the ISM data come in weaker. We obviously have this Atlanta GDP Now tracker that's come in pretty weak, which of course could change in reverse just as quickly as it went down. But the data, I think, is concerning, and we have to pay attention to that.
I mean, Cameron, the market is either going to need a chiropractor or a cold plunge by tomorrow because it's being pushed and pulled all over the place, knocked down, picked back up, then knocked down again. And all of this is really about what Liz said, right? A scare that the economy is slowing and slowing fairly quickly, and the uncertainty that comes with all of this.
We have seen some signs of growth fears starting to pick back up. The thing that we're watching the closest is credit spreads. Credit spreads will tell you how concerned we should be about further downside of the market. They're only up about 35 basis points off the mid-February low. They're still on the high-yield basis below 300. This is not an economy that is falling out of bed, according to the credit market. But I think we have to appreciate just how there was no margin for error in valuations when we started this year. Positioning was so very crowded. Valuations were so very high. So we don't find it surprising to see volatility. Our view for the year was wide and choppy range simply because you had no cushion to absorb any form of bad news.
Steve, I mean, this is an economy that is suddenly beset with a lot of uncertainty. You got it in the beige book, as you pointed out yesterday. You hear it from CEOs. You hear it from consumers. You see it through the data. You hear it from retailers and restaurants. and other areas that are very sensitive?
Yeah, it's in the soft data now for sure, and it's in there in a hard way, but it's not yet in the hard data. We're bracing a little bit for the jobs report tomorrow, Scott. Right now, this morning, we had this 172,000 of layoff announcements from the Challenger Gray. You also have this talk anecdotally out there about the extent to which tariffs are causing people to not make certain decisions like buying, individual consumers buying things, and perhaps CEOs and CFOs not making certain investments. Scott, two threads out there. One is the chaos on the tariff front. Nobody really quite understands why they're doing tariffs. We got Lutnick on today saying we're doing tariffs on Canada and Mexico because of fentanyl, and then all of a sudden these tariffs are partially or somewhat, nobody even knows how much, have been taken back. And then the other thing, Scott, are these trade flows that are out there, these capital flows. You have this investment happening in Germany. You have stimulus in China. That is sucking capital away from the United States, making Germany and China both rivals for all of that capital that came here previously without a question. And that's another thing that puts stocks under pressure here in the U.S.
SoFi Technologies, Cramer notes, is no longer just a lending company but a beacon of fintech evolution. Its transformation into a service provider stock means greater potential, yet with risks lurking at every corner. It's etched in rock, as Cramer emphatically suggests. Sell part of your holdings and play with the house's money. An approach, some might say, is akin to hedging your bets at a blackjack table. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
The Walmart White House seems determined to bring everyday lower prices to the stock market. And that means we're just going to have to live with the pain.
The house of pain.
As this administration sees it, investors will have to suffer because the mold must be broken, the status quo interrupted. We can't worry about the stock market, for heaven's sake. It'll take care of itself. Including that vicious thrust and very weak parry is a notion that you don't need to invest. You don't need to own stocks. Every asset class is caveat emptor at this point. So you just take your chances and do your best to accept the inevitable pain. It can be difficult. It can be almost nonsensical. It can be almost whimsical. And it can lead to days like today, where the Dow plunged 670 points, S&P tumbled 1.22%, and the Nasdaq lost 0.35%. Hey, by the way, that was a nice comeback. We're down 1,300 Dow points in 2 days, and the president just can't focus on it and work on the trade issues at the same time. Trade imbalances, illegal immigration, fentanyl, they all take precedence over the Dow Jones Industrial Average. Now, I've been off for a couple of days. Just give me actual clarity into how the situation will shake out. I make no judgments about whether the Trump administration's worldview is good or bad or even right or wrong. I just want to put it out there so you know what you're getting into if you decide to stay in stocks during what's becoming a tumultuous phase in our country's history. All this could change, but let me give you the state of play right now. First, what matters to the White House is not whether a country is an ally. It's whether that country pays its freight. Its approach is very uneven, which makes it very difficult to fathom. For example, as they see it, Mexico and Canada unfairly take our jobs and even have the goal to have a trade deficit with us. Oh, and they let fentanyl slip through the border, which kills our young people. So they have to pay the price, 25% tariff. Now, I want to be clear. I'm not endorsing this view. It's what's happening. Second, it doesn't matter if there's a pre-existing trade agreement among friends. Doesn't matter if Trump himself negotiated that deal in his first term. As the White House sees it, we didn't sign these trade agreements thinking they'd steal our jobs, even if it meant that we get cheaper products in exchange and our companies get access to the markets. Our trade agreements with Mexico were meant to keep us in business by exploiting the possibilities of cheap Mexican labor, which allow our manufacturers to escape from the clutches of expensive American labor unions. None of that matters now. Third, the changes are inconsistent. But so what? American companies that use Mexican and Canadian labor will have to pay a big. But South Korean, Japanese, and European companies, they ship millions of cars here with de minimis tariffs. Nobody said things had to be fair. Will tariffs on our trading partners, these next ones, are they going to come? There's no sign that they will, no sign that they won't. So you have to stay on your toes. With these tariffs, we are subsidizing South Korea, Japan, and Europe at the expense of GM and Ford. Ironically, the only country that seems to be immune to tariffs right now is Russia. Again, that's not a pejorative. The Russians run a relatively small trade deficit with us, so the White House doesn't seem to care. Fourth, Taiwan may or may not be relevant. It could help its cause if it started paying more for its defense. It doesn't matter that Taiwan Semi is located there and is the single most important strategic asset in the world for both our industry and our military. Perhaps it will cause it will help Taiwan's cause that Taiwan Semi has pledged to put $165 billion to work here, despite the seeming impossibility of finding the construction workers or the engineers. They're basically paying us tribute. And that could do the trick in the absence of heavy weapons purchases. As between the Chinese and the Chinese can't buy weapons from us, but the Taiwanese can. So why don't they open their darn checkbook?
Cramer's observations delve into broader financial narratives, particularly the enigmatic trade policies depicted by the White House's current administration. With tariffs sparking debates among allied nations, companies like SoFi may find themselves in a unique position to weather challenges due to their versatile domestic-focused offerings. Research indicates replicating top hedge fund picks can lead to market outperformance, a fact evidenced by public portfolios' 373.4% return since May 2014. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
There's no knowledge of how and when the tariff out of Mexico will be paid. Will you get a bill? Will the truckers get a bill? Will the whole thing be run on the honor system? Will it apply to every company? Will there be special pleadings? We don't know. Technically, tariffs should be enforced by the Customs and Border Protection, but they got their hands full with Trump's deportation plan, so who knows? 6, if an American company commits to a giant policy of job and factory expansion in this country, will it be eligible for some sort of rebate against punitive countries that would otherwise hold them hostage? Think Apple. Or are they paying up no matter what? 7th, it does not matter at all that tariffs have historically been considered bad for business or that they hurt our economy, something that President Ronald Reagan laid out most eloquently when he had to put targeted tariffs on the Japanese semiconductor industry. If you want to see a more conventional way to talk about trade and the need for fairness without causing great havoc, I suggest listening to Reagan's brilliant radio address from April 25th of 1987 on the eve of a visit by the Japanese Prime Minister. Trump has repudiated Reagan's views on free trade. In the context of today, Reagan seems soft-line and simple. He was never soft-line and simple. Never will be. As the White House sees it, that approach doesn't work anymore because our allies are no longer useful. In fact, they're all free riders except the Russians, as we know after Friday's press briefing with the jumpsuit-attired head of Ukraine. Did you expect Brioni? 8th, it makes no difference what our allies say or do. Their assurances mean nothing. If you're upset and sell stocks because of them, or if you bought stocks while Biden was president, or even a few months ago, when you could convince yourself that Trump wouldn't go crazy with the tariffs, well, that doesn't matter. As the White House sees it, this isn't about you. It's about American hegemony. 9th, Canada is a total abstraction, not a true trade dispute. Their way out of the jam is just to say, listen, we really would prefer to be the 51st state if you'd let us. The White House sees their sovereignty as an insult. 10, this administration thinks it's simply unbelievable that investors are complaining. The CEOs aren't complaining, right? Have you heard anyone complain? They aren't saying anything. Why can't investors just go buy all sorts of cryptocurrencies, go on for the darn ride? They got the call about the strategic crypto reserve ahead of time. Can't they just run ahead of it? What's the big deal? Oh, and the groundswell about how Nvidia is way down from its highs? As the greatest TV character of our time, Jeff Probst from Survivor, likes to say when you're voted off the island, ain't got nothing for you.
In the dynamic, ever-shifting world of stocks, SoFi Technologies emerges as an intriguing player with diverse services and geopolitical resilience, poised for potential growth. The current market scenario, albeit volatile, presents a ripe opportunity for those ready to embrace calculated risks. But what do you think? Share your thoughts. Finally, if you would like to know what companies like SoFi have been up to these past few days, go ahead and click on the next video on your screen. See you there.